Let's go now to Chicago and check in with Scott Bauer of Prosper Trading Academy.
Let's go down to the C-Bone and bring in Scott Bauer. He's the CEO of Prosper Trading Academy. Scott, let's talk some Amazon.
Scott Bauer.
Scott Bauer.
Scott Bauer.
Scott Bauer.
Let's bring in our first guest. Scott Bauer joins us this afternoon, the CEO of Prosper Trading Academy, for a look at a few stocks he's got his eye on. Scott, welcome. I want to talk jobs and, well, get into a couple of the stocks that you wanted to bring to our attention. Let's talk first and foremost what to be looking for into the non-farm payrolls report. You've got the wage component as well. A lot of people are talking about how employers have had to provide that extra incentive to get workers back in.
No doubt about it. And we've had back-to-back disappointing results, the last couple of months. And tomorrow may be one that is just scrutinized even closer than the latest ones because of the Jackson Hole, meeting with the Fed coming up in a few weeks. So I think a lot of people are going to be looking at that and say, man, the Fed is really going to take tomorrow's report and that's what they're going to base their decision on. Now, I don't believe that. I think that the Fed already has, in mind what they're going to do, regardless of what tomorrow's report is, unless this is a massively blowout one way or the other. But we have seen the last two reports be pretty disappointing. So what are we looking for? 870,000 jobs. But as you mentioned, what about wages? Average hourly earnings are expected to rise about 0.3%. And you and I, we've seen it everywhere, right? Shortage of workers. And yes, employers are really having to dig into their pockets just to hire people.
At least this time around. To our floor show traders. All right, let's bring in Scott Bauer and Tom Hayes. Scott, could this deal, which is very much a millennial play, throw off the August bears? And if we were to see a classic August pullback anyway, what's first on your shopping list?
So first off, Liz, I think this is a one-off. I think the Square deal is a great deal. I'm not looking for a continuation in the space of other deals coming out like this, whether it's in August or even through the rest of the year. I think this is, kind of out of the blue, a big one-off. Now, let's talk about August. August, as you said, one of the worst months of the year, especially after markets had been up the first half of the year. When the S&P is up 13% or more, first half of the year, August is down about 0.5%. That being said, we are in this buy the dip mentality, which has worked. So I really think there's a few sectors and a few individual stocks to go from here. And I'm not talking about the Reddit or the Wall Street bet stocks. First off, the banking sector. It's imminent that the Fed is going to make adjustments. We know that's going to happen, but it's not really that. Why I love the bank so much, it's because the big guys, JP Morgan, Goldman Sachs, Morgan Stanley, they are still going to be recording record trading profits. That's number one. The semis, I've been talking to you for a while now how I thought the semis were going to break out to all-time highs, and we are just about there. I believe that they have a lot of room to go still. Now, individual stocks real quickly, love Amazon. This pullback after the, let's call it, awful news that they had on the report here, big buying opportunity. I also love Nike. Nike is unbelievable. Even though their PE is higher right now than it has been historically, their growth rate has accelerated. Love the digital space they're in. Those are two stocks I'm really watching.
BTC, a little quiet today after a rip-roaring bounce back from 30, leaves us right in the middle of the range from 2021. Let's go to Scott Bauer, who's been talking Bitcoin, crypto with us now for a couple of years. Scott, we're at a really interesting juncture here where there's such clear defined regimes, the one from Q1 and then the one from the last couple months, and we're right in the middle. You got a bias on which way you think we're going to go?
We are definitely right in the middle, and right now I'd say that bias would be to the upside, Oliver. But that could change next week. That could change in 3 weeks. I think we're seeing a little bit of a pause, a little bit of a rest today because this was almost a little bit of the buy the rumor, sell the news type of event. Lots of anticipation ahead of the infrastructure bill. Now that is in place, now that there is some clarity, that's all the market always wants, right? When the market's anticipating some kind of news event, good, bad, or indifferent, the market usually settles in after that news comes out. And I think that's what we're seeing here. But it certainly, has a lot of momentum. Bitcoin has a lot of momentum behind it right now. And 44 was a pretty key number for me, 44.2 or so, which we almost got down there today. We didn't quite get down there. I think the low today was maybe 44.6, but that was key to hold some support there. And I would absolutely love to see Bitcoin just kind of moderate a little bit here and start coiling again after, the big run up here.
Okay, what would that look like to you? Sideways action, consolidation between that kind of 42-ish, 44 and upwards of 46, maybe 47. How long could we do that, Scott, do you think?
I think we could do that for a good week to 10 days or so. We'll probably get some sort of movement again ahead of Jackson Hole. Not that is going to be so relevant to what Bitcoin does, but I think you may just see overall, some risk assessment in equity markets and bond markets and in Bitcoin ahead of that.
Okay. So what's the biggest impediment to getting that upside that seems like the direction we want to default to in your analysis here, Scott? What could get in the way? We had a conversation about the dollar earlier and maybe a Fed that has to get a little bit more responsive if inflation's warm. What is the news flow that you're looking for to give us clues as to whether or not this plays out as expected?
Oliver, we've talked for the longest time about the correlation, the relationship between Bitcoin and the dollar and interest rates and the Fed. And we're not clear, right? We don't have a clear decision on what that really is. In fact, over the last week or so, 10 days, you see the strength in the dollar, and all of a sudden, Bitcoin rallies as well, which is almost counterintuitive. What would cause that catalyst here? I think, again, some clarity from the Fed, whichever way it's going to be. I think clarity. That, again, the market does not like uncertainty. The market likes the news once that news is out. So I actually think that once we do have a little bit of clarity, that paves the way for the move higher.
All right. So, Scott, so we get some clarity here. As far as the next week of data go, we do have some interesting numbers. Following our good employment, it seems the market is hopeful about our future again. After this infrastructure bill, a little bit of follow through, some of that reflation trade. Bitcoin and yields climbed together the first quarter for a while. Dollar was up too, to our guest Matt Weller's point at the top of the show. Could we get that type of regime again, Scott? What do you think the potential for that Q1 blueprint for reflation is right now?
I think we can. And actually, Oliver, I'm looking for some pretty hot numbers over the next 2 days, CPI and PPI, which I think would be a good thing for the market. We may see the market sell off right away or, maybe take a little bit of a hit if those numbers are really hot because, then people are really going to think, all right, the Fed's got to act now. This is what they're going to do. They're going to start pulling back, sooner rather than later. And we're going to start seeing those, yields increase sooner rather than later, which, for the equity market would obviously not be necessarily a great thing. So I think any kind of pullback there is a buying opportunity. And I think it's a buying opportunity, quite frankly, across the board, like you said, in dollar and yields and Bitcoin, that they can all move together here over the next several months.
We're talking the Dow is the only one of the four that's negative here. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, is joining us this morning to take a look at some data that just came out, get ahead of some that's to come, headed our way, and, well, take a look at some of the financial markets. Scott, welcome. Thanks for giving us part of your Tuesday morning.
Thank you, Ben.
Thanks to you. Unit labor costs and non-farm productivity. I'm looking at numbers at the bottom of the hour that just got released, both coming in below estimates. I think what really stands out for me is the unit labor costs last month, Scott, negative 2.8. That got revised down from a positive 1.7. I mean, this feeds right into that inflation discussion.
There's no doubt about it. And the Fed is just going to have so much data coming at them over the next few days here and next week or so headed into Jackson Hole. What came out today, okay, it's out there. It does feed into the inflation talk. The focus really, though, Ben, is going to be tomorrow's CPI and Thursday PPI. And how much is that really going to affect the Fed's decision? I don't think a lot. I think it's going to be more headline news. I think it's going to be more the media talking about it. I think the Fed already knows what they want to do.
Scott, I think you're right in terms of this not necessarily being the major market mover or the major focal point here today with what we have headed our way. I've got the bonds, I've got the 10-year here, both on the 5-minute time frame. You can see the move lower and the limited reaction too as far as this number. It's just not the market mover right now. And again, CPI, PPI, some of the other focal points here certainly front and center relative to. Scott, speaking of one of those focal points front and center, the dollar firming up back to 93, still short of some resistance up around 93.50, but starting to attract some attention nonetheless.
It absolutely is. And that 93.50 number is something we've talked about for a very long time. And, you know, it looks like it might be headed there, Ben. I mean, last week's catalyst with the jobs numbers certainly helped spike the dollar here and hurt some commodity prices across the board. I wouldn't be surprised if the dollar stalls a little bit here, but the next 2 days, we could see if we get some really hot numbers here, we could see actually break through that resistance.
Yeah, I want to just show that resistance in terms of, because I think it's significant. This is a good look at the daily time frame, and while the move that we've seen off the 104 handle, that was the area that we saw the pandemic spike high, the trend environment that's been playing out to the downside. Scott mentioned here there's some key resistance right around this area, 93.50, and if we get up above it, we're talking into that 94 handle. Scott, levels we haven't seen since going all the way back to fall of last year. Some of this seems to be tied to, now we're seeing weakness in some of the other foreign currencies, which I want to get into there, because the yen had been strong, the Swiss have been strong amidst some of the China concerns, the crackdown concerns we were just talking about with AJ, but with that kind of tapering off or diminishing, at least on the short term or momentarily, we've seen those safe haven type currencies, the Swiss and the yen again, come off a little bit. The dollar firming up some, but also rates have been inching higher on the stronger than expected jobs report. And, well, just some of this talk from, we were mentioning earlier, Bostic it is recently, Rosengren, we're talking about, some of the other closely watched names. And I'm trying to think, Bostic actually, I'm trying to remember, spoke for, who was it? Oh, Barkin as well, basically saying both of us expect to see rates higher sooner rather than later. I'm sorry, tapering sooner rather than later.
Tapering. Right. And I think they're on the right track and they're getting everybody prepared. So, you know, whether it's Jackson Hole or whether it's the meeting afterwards, I think that the market should be prepared at least for that talk. I'm hopeful that the market is not going to have a big shock when that news comes out, which I think we're going to see in the next 3 weeks or so. So I don't know how much risk off there's really going to be ahead of that, to be quite honest, because it certainly looks like it is imminent.
Whatever happened to the discussion of $100 a barrel? That was overblown, wasn't it?
Well, it was overblown, at least temporarily. And, everybody got caught up with the reopening play, and, maybe for good reason. But as the new variant started coming into play, which, this didn't happen overnight. This has been out there for a couple months. The demand just started pulling back a little bit. So I could not see us getting above that 75 level. And that was a level that I put out there, in multiple places saying, I really believe this is a great area to get short. Always use stops. So, if the thing does explode, you're protected. I have covered those. I definitely have covered those. I haven't gotten long yet, but I really think that the 65 level, maybe if we hit 64.5, that's a great area to start getting long again. And the reason that we're seeing this big pullback, Jared had just talked about it in the prior segment. Really, a lot of it is about China and, the expansion, unfortunately, of the Delta variant there and their lack of demand, or, the massive slowdown, if you will. And they are just not importing the amount that everybody thought they were going to. So that has really put a scare into the entire marketplace. And then, of course, we have to talk about the dollar, Adam. I mean, the dollar is as strong as it's been in quite a while. And certainly when we see a stronger dollar, that does not help, anything in the commodity space.
So, Scott, it sounds like you think that we're at least near the bottom for crude, at least in the short term. Is that correct?
I do. Can we go down to $60 a barrel? I think we can, but hopefully, and I'm not a scientist, I'm not a doctor, but certainly based on what's happened in the UK, it looks as if maybe 2 to 4 weeks from now, maybe it's even 6 weeks on the longer end, but that we may hit, kind of the top in the spike of the Delta variant. And I think when that happens and we start to see cases go down again, which we all hope is going to be sooner rather than later, we're going to start to see an acceleration again. So I think we're closer to that. I think we're on the other side of the midpoint, if you will. And I really like starting to accumulate some long positions just below where we are.
Scott, when you talk about that strong dollar pushing down commodity prices, we know there's demand for the, inputs. Let's just look at real estate, for instance, like lumber came down, copper has come down. What you just said tells me all of that stuff's going to go back up. Would now be the time to look at perhaps buying some of those futures?
I would. I would start, buying piecemeal into it because, listen, the Delta variant and everything else going on with COVID can change on a daily basis. Nobody knows the exact timing of when we've seen a top, when we've seen a bottom. But given the massive fall off in prices that we've seen from very lofty levels, albeit in lumber and copper, yes, I would start accumulating some longer positions again.
Hey, Scott, when will these prices be reflected at the pump? Because we've seen a massive drop in the price of crude over the last couple of weeks, yet the price at the pump hasn't moved too much. Why is that the case?
It is because what we have seen is actually a big buildup in stocks reported by the EIA of crude, but a drawdown in gasoline. So even though the oil output is starting to come down a little bit, people are still driving. So it's the middle of summer and people are driving. The demand for gasoline is still there. We haven't really seen that wane yet. So you would think that one really should feed into the other. And, I get as upset as anybody when I see that I'm paying $3.50 to $4 a gallon when I see what's happening to the price of crude. So we're probably not going to see gasoline prices come down very much, maybe until we get into the fall, quite honestly.
Shifting from gas to gold, what do you attribute the drop in gold that we witnessed over the past couple of days? What's going on there?
Yeah, so a lot of people were talking about a fat finger, instance last night where we saw the, if you will, a mini flash crash when gold just got absolutely hammered. But really what I think it was gold hit a critical level around that 1730 to 1740 area. And as soon as that happened, you got a lot of sell orders that came into the market, a lot of stop loss orders that came into the market. Also what happened, because it was overnight, there's a holiday in Tokyo, there's a holiday in Singapore, and a lot of traders were gone. Volume was very light. So I think what happened overnight can be attributed to that. Now, the longer term trend absolutely is to the downside here. And the fact that we broke through that 1730, 1740 area, that is pretty critical. And that's now going to be something to watch as gold rallies, whenever that is, whether it's today, tomorrow, next week. But right now, the pressure is certainly on gold with, the dollar, with the Fed in all likelihood coming to the table shortly to announce that they are going to start tapering, whether that's imminent or a few months down the road.
Scott, how low do you think the price could drop here?
I think we could see sub 1600 or 1700, excuse me. I would look for about 1680 area here. That would be my next point where I'd want to start taking a long position.
Scott Bauer, CEO of Prosper Trading Academy. Scott, what do you think about Disney right now?
Yeah, I think you just hit the nail on the head. Is this stock has been coiling. It's gone nowhere for a long time, and I think it's ready for a launch. I really think it's as George said.
All right.
They're going to deliver some great numbers on the streaming side.
Let's go.
Driver side. Yeah, exactly. The park reopening, I don't think that's going to make a hill of beans difference to the bottom line here for this report. I don't think it's going to impact any future guidance whatsoever. I think it's really all going to be about the streaming network. And I think, again, from both a technical and a fundamental standpoint here, this thing is ready to launch, and I'm playing it to the upside. I am buying just a very bullish call spread.
All right.
To September expiration, the September 180, 190 call spread, $10 wide. I can do that for about $3, maybe even a little bit less right now because the stock is down a little bit right now. And as George said, the market maker expected move just on the print for this week is right around $6.5, $7 just in, for the next day or two. So I'm buying myself some time. I'm buying myself over a month here. And again, I think we break out. I love Disney here. Again, technically, fundamentally, it's all going to be about guidance. It's all going to be about subscribers in my view.
Okay, so subscribers and the streaming component. See, that's the part here that the market might know is going to be hot, right? So the kind of tiebreaker or the surprise, maybe that guidance about what happens going forward. But it sounds like, Scott, you think they're going to have such a powerful trailing figure here that it's going to be hard to doubt the sustainability and the stickiness of that Disney Plus business.
I really do. And listen, if I'm wrong and the stock backs off here, okay, I'm wrong. I always make, these suggestions, and I always trade this way with a spread so that if I am wrong, I know what my risk is. I know, the maximum I can lose, but I love the reward to risk on this trade. And again, from a technical standpoint, from what I believe they are going to report here, I think this is just a great opportunity to be in Disney.
Okay, so you're looking for September. So you think this will kick off basically soon, right? After earnings or around it. So when you manage this trade, Scott, if that does lead to some profit taking in the short term, where do you draw the line to where you say, okay, it's not going to have time to get back to where I want it to? If, let's say we drop 5% in the next 2 days or something.
Yeah, 5% to me would be a big move to the downside. That would be a pretty big drawdown because that would break through some major support in the stock to the downside, and I would definitely have to reevaluate this trade. I typically look at my trades and look at a 50% loss to the downside. So if I'm paying $3 for this thing and the stock loses enough where the value of this spread gets down to $1.50 or so, that's probably my white flag area where I say, okay, I'm wrong. Enough is enough here. But again, I'm buying myself enough time here, Oliver, that even if the print isn't wildly bullish, but we kind of stay in this coiling atmosphere here, I'll hold it for a little bit.
Okay, coiled Disney and a bull trade that works with George's positive analysis. So we'll be watching here for Disney to see if this thing finally wakes up. Scott, nice walkthrough. I like it. Clear, helpful, straightforward for those who think Disney's got some upside.